Muktar Mohammed, an analyst at Assar Investment, joins me now for this discussion. Muktar, how's it going, and what's driving sentiment in the market today? I think you need to unmute.
Okay, can you hear me now?
Yes, I can hear you now.
Okay, sentiment is still based on perception, despite some of the good results we've seen thus far. We've seen investors looking at moving from some stocks to other interim paying dividend stocks. We see that play out with the fantastic result, or we won't say so much a fantastic result, but maybe because of the situation we are economically, most investors are looking at liquidity, and they see any stock that is paying cash at this moment and is giving them good liquidity, and then they are looking at by the fixed income returns, by the economic data, especially the inflationary data, and then again they are looking towards the next quarter or the final year, and beginning to make their calculation and beginning to enter some good stocks that, like you said, is most of them are at a premium at this moment when you look at the earning per share of some of these stocks.
Because Muktar, you talked about inflation there and also what we're seeing play out in terms of the interest rate environment. But more or less, we saw earlier that knee-jerk response with a lot of investors exiting the equity space and more or less finding their feet in the fixed income market. Are we still seeing that play out more or less now?
Yes, we're still seeing that play out, but maybe not the way in large numbers like we initially thought it will be, because some of them are now looking at capital appreciation, not just the return in terms of dividend payout, especially with the low price of some of these stocks. So some of them are beginning to make their entries back, but again, they are doing that in by and by looking at 3 months possibility in terms of price increments, especially in capital appreciation, especially in stocks that are paying good dividend, and also still looking at what is playing out also in terms of the dividend ratio, the dividend ratio in terms of percentage, by and by what they are going to get in the fixed income space. Some of them are waiting to see the closing dates of these stocks, maybe enjoy those dividend payouts in terms of percentage ratio and that dividend yield, and then maybe then they will now move to the fixed income space and then come back again. So it's all about strategy and what you're going to do, but most especially it's about perception, because we thought that some of these results will be bad, but fortunately these results have been good, and so they are having a rethink.
We'll get into the results soon, but I'd like you to more or less speak to more or less, do you agree that more or less bargain until we continue to drive sentiments in the near term?
I didn't get that.
We will see more bargain until continue to drive sentiments in the near term.
Definitely, especially when they are marked down for dividends, because some of them might go as low as their 15 weeks, 52 weeks low. So we could see sentiment drive in there. But like I said, it's all about perception. You know, the current perception of Nigerians and especially investors is not bullish in terms of return by inflation, and also in terms of the exchange rate volatility. Yeah, I think now we've even moved beyond the inflationary figures, and most investors are looking at the exchange rate volatility and saying comparable to what you get if you invest in this dollar-dominated equity, or and then naira-dominated equity. Then foreign direct investors, foreign portfolio investors are not coming now because of a problem they have in exiting the market when they need their funds. So and this has nothing to do with the market. This has everything to do with the economy situation. Like I say, you cannot separate the market from the economy, but sometimes the market takes a life of its own. But when you have, you are not able to get your money out, it becomes, no matter how much the market takes a life of its own, the economy tends to slow it down.
Yeah, because we saw that play out in the aviation space recently with some names already trying to pull out from Nigeria for a bit. But let's get into some of the earnings that we saw more recently, and I'd like to look at the banks and your take on what we saw play out with. First, let's start with Zenith Bank.
Well, Zenith Bank just gave us from 110 billion, and we got 115 billion, which is just an addition of 5 billion. But you look at the earning per share move from 330 to 358, and so And that means Janet Bank can still comfortably add up to their investors in terms of their dividend payout at the end of the year. But they have a fixed dividend, interim dividend policy of 30 kobo. So when you look at it, then it's a good result. Especially again when you look at the economic situation in terms of the banking space, especially regulatory, have come up with a lot of strategy that some of these banks have to re-strategize. And when you look at Zenith Bank itself, it's not the bank that had the holding structure yet. It's just dealing with the bank itself. So you could commend them for those good results.
Yeah, and Stanbic?
Well, Stanbic is a surprise to most investors. I mean, they are paying entry limit of 150 kobo. The price is when you look at that via other stocks, and if you want to do comparing the analysis and you look at Stanbic paying 150 kobo, you look at the price of Stanbic, you look at the price of Zenith paying 330 kobo. So it's definitely a bad comparison, but it's a good result. I think it has attracted sentiment to investors that it gained when that result came out. And I think investment sentiment towards Stanbic is still bullish.
All right, another sector that was saying that's getting more attraction, like if you hear, I had my last interview with Adia So there from MTN talking about the launch of the 5G, and I'd like to know how the market is interpreting the move like this.
Well, the market interpreted positively, but it did not add up to the price of MTN at the close of market. But then it's a positive news, especially being they are the pioneers, and we see a lot of like I said, communication has gone from voice to data. And if they are launching first 5G and now it's a data, so like she said, it's going to help in terms of a lot of businesses begin to take their business to the next level. So we see that price, that's perception, but we are not seeing it play. Remember that when the market is this weak, especially when it comes to economic data, sometimes good news don't tend to affect some of these equities in the short term. But in the long term, when the improvement in terms of economic activities, those are the news that begin to drive those equity. And like she said, also you need to know that they are going to do a lot of investment also. So Nigerians are looking at that and knowing that MTN, the shares that the Nigerian purchased recently were not shares that were going to help them build their capital base. It was shares that most of their shareholder investors were exiting and were asked to sell to other Nigerians. So if it was like maybe initial public offer or IPO or just public offer that most of those funds find themselves into MTN, we may have seen a bigger move, because then that means in terms of infrastructure, they will have the liquidity. But now they may have to go. They are always go to the bond market to do, or getting the getting funds from banks also to begin this expansion. So that also does not help the bottom line in the short term. But in the long term, when those investment begin to yield those desired results, then it begin to affect the bottom line, and then the investors begin to smile. But I don't see, for the short term, it might remain like this despite being a good news. But the long term, I see a very strong run by MTN.
There's still quite a lot of time for investors to lap in information and see the benefits here. But I'd like to get your assessment of the third quarter as a whole. It's been quite mixed. Some sectors have had it quite bad this year. Talking about the industrial goods sector, it's down about 14% when you look at how it's been so far. But what's your take on the third quarter as a whole?
Thus far, I think the industrial good, we're not so surprised what is happening. When you talk about industrial good, you begin to look at consumer perception, you begin to look at earnings of consumer, and you and I know that Nigerians are having a challenging times and in terms of price of these goods and services. And they have about three things that are affecting the consumer goods and the industrial sector. You have the inflation that is driven by cost of production. You have the inflation that is driven by macroeconomic situation. And also you have inflation also that is driven by demand and supply. So that are not most Nigerians like if before you were buying two commodity, you're trying to buy one and try to see how you can manage it. So we're not surprised about that, what is happening in that space. But when you look at the financial space, which tends to be the backbone of any economy, especially the tier one banks and even the tier two banks, you are very, very encouraged that we are not so much in a systematical risk, especially in the financial sectors. Even when we are thinking that in the non-performing loans, were going to go higher because of terms of the Russia and Ukraine high energy costs. We don't seem to see that, and that shows that a lot of businesses that borrowing are being able to pay. So I think it's positive from that space, but the consumer good, the industrial good space is not a space that is looking very good. But if you look at the embarrassment also, the result was not bad, but yet because of the perception, we are not seeing those bullish sentiments in that sector.
Mukta, because there's a sector that still define the odds for me in terms of all the headwinds we've seen this year so far, but then the sector is still moving very strong, and it's the oil and gas sector. I'm wondering why we're still seeing that level of profit and gains there in that sector, despite all the headwinds that we're seeing play out.
It's a trouble sector when you look at this, the stocks that are really supposed to move that sectors. Remember that Total that is there is just the marketing arm that is listed, not the entire Total Energies that is listed there. So, and when you look at that space, then you are looking at the challenges that the petroleum industry bill has not fully taken off. When you look at that also Total also you realize that also the subsidies regime is still ongoing, so they are not even importing their own product. They are getting from MTN to their various outlets. So you won't see those active, and that is a very trouble spot. For Wando, you know that Wando has been in and out of courts, and thus far they've not settled at all. Even when you think they are settling in one case or the other from shareholders or from the investors. So it has not been good for them. Their result also, they've not paid dividend for a while, and you know that what drives the companies in Nigeria are dividend payout. The only good news there is Seplat, and if you look at the movement of that share, it has moved also thus far. It seems to be the only one that are profitable, profited from this bullish sentiment, especially the high cost of crude oil. But then they came the bad news about their issue with Mobi, and so that has also not helped investor sentiment. Remember when that news came in, investors were really excited about it and thinking that will make them one of the biggest player in terms of the energy sector in Nigeria.